Hi friends, many people ask which stock is cheap. Suppose a stock which is trading at 10 rupees, that is cheaper, or a stock which is trading at 2000 rupees. Which one is cheap? So cheap or costly, this cannot be decided or cannot be ascertained merely by looking at the stock price alone. There are much more factors decide whether a stock is trading at a cheaper price or stock price is costly. Suppose the 10 rupees stock, from 10 rupees it may go up to 14 rupees, then again 10.5, and again travels in this range between 10 and 15. At the same time, this 2000 rupees stock becomes 3000 and comes down to 2500 level, then again goes up, again comes down to 3500 level, again goes up to 5000, again comes down. So this is traveling in a trend. You can see the cheap stock remains cheap and remain inside that small range, while the costly stock becomes more costly over a period of time and moving in a trend. So it is clear that we should not look for those stocks even if the price is very less as 10 rupees and moving inside a small range. Rather, we should always look for those kind of stock which are actually in a trend, whatever may be the price. If it fits to our budget, then we can look for this kind of stock which are actually moving in a trend. Now the question is whether this 2000 rupees stock is costly or cheaper. Whether it is always costly? No. It can be called as costly sometime, it can be called as cheaper sometimes. So we should identify when the price is costly and when the price is cheaper. So that is the analysis what we will be doing today. It is like suppose any vegetable, suppose say tomato rate goes exponentially high up to maybe 100 rupees a kilo, and all of a sudden due to hot climate or any other reason the tomato rate receded to a level maybe at 60 rupees a kilo. The tomato rate receded to a level maybe at 60 rupees a kilo, then you can say now the tomato price is cheaper. In stock market also, because the price goes up and down, so we should identify the proper area where the stock price becomes cheaper so that we can enter the trade. When we try to buy something for long term investment, we should always look for three things. One, the company should be fundamentally good, a trustworthy company. Second, it should be available at low price. And third, there should be a minimal risk involved in the trade. Means when you are trying to catch the price, that time the stock price, that time the risk should be minimum. So now the question is when we should enter the trade in this trending market. So when the price is going from 2000 to 3000 and you never know that it will come down to 2500, you may think that price will again go up and you may try to enter the trade. That is totally wrong way of entering the market. Even though the price is going up from there, we should not enter the market at that point of time, because whenever we enter the market we should find our region, we should note down our region. What is the region is that price is going up, that is the only region, and that is not a region, that is a biasness. We should not take the trade because we are biased. We should enter the trade with knowledge and with awareness. So we'll find out the reason to enter the trade. When price is going from 2000 to 3000, there is no reason to enter the trade. However, when the price comes back to 2500, there it is trying to go up. then we can think of entering, because it has taken the support near 2500, and if we enter a little above 2500, then our risk is very minimum up to this much. So that is a reason, there is a reason. And second is that it is trading near the support line. So there are two good reasons, that is why we are entering the trade here. But here we do not find any reason, because just because it is going up we are entering into the market, which is wrong way of entering the market. Many retailers try to do this mistake, and ultimately they are thrown away by the market. Here it is traded at 3000, and here it is traded at 3500. Which price is cheaper? Can you tell which price is cheaper? Even though this 3000 price looks lesser than 3500, still 3500 is a cheaper price, because that is a more reasonable area where one can think of entering the market. If you enter at 3000, then it is just a by way of some guessing or some news or some biasness. Whereas if somebody enters into the trade at 3500, then he has analyzed the market properly and taking the trade consciously. So this trade will be successful. Even though the trade was taken 500 rupees higher than the previous one, still this will be considered as a good trade than the trade which was taken at 3000 rupees. So right reason for taking the trade in this near 2500, near 3500, near 4500, so on and so forth. Now the question is whether any stock in the current market available at good price. Let us see the chart. We have found out and we are presenting the same to you. So this is the weekly chart of Asian Paints, right? So Asian Paint is fundamentally, no doubt, it is a good company. Second is that you draw a trend line like this stock price, look at the support line. This is the support line. How many times the price has taken support on this red line? The previous week candle, first time it got closed below the red support line. However, because last 2-3 weeks the market was in a downtrend, so it may be the reason that this price has fallen substantially, and now it is available near the support zone. Although it has broken the support line last week, but still there is possibility that it will bounce back from here, because it is a good stock and it is in the uptrend. When we can say that the uptrend is reversed, now downtrend has started, because when this will break this low. Okay, so this is the previous low. If it breaks this low, then we can say that uptrend will reverse. But at this point of time, it is still uptrend, and with our stop loss maybe kept at here, and we can observe the price movement. If it goes down below, then also it has a possibility to take the support near the next support area. But if the price closes below that, then downtrend will start. But here we have enough reason to observe the price movement, because it is trading near the support zone. If it goes below this, then we'll not be interested in this trade. So please keep Asian Paint in your watch list. The second stock what we have selected is our favorite Bajaj Finance. This is the weekly chart of Bajaj Finance. Here also you draw a trend line like this. Now you see 1, 2, 3, 4, 5 times it has taken support on this line. Here also the risk is very minimal, because the support is here, and the previous to previous week there is another support is there. So if the movement can be observed by keeping a stop loss near this range, it is likely that the price will bounce from this region. So this was our analysis on Bajaj Finance and Asian Paint. Please add Bajaj Finance and Asian Paint to your watch list. Observe the movement of the price. So this is our analysis for today. Thank you very much for your valuable time. See you in the next video. Thank you. Bye bye.